factors behind the growth of mobile internet and of smartphone penetration and cell phone penetration in general. One of those is falling prices. We're seeing across Africa the cost of calls and the cost of data falling, and then at the same time we're seeing the cost of smartphones dropping, and as cheaper smartphones with higher capacity and more features come into the market as well. That again transforms the market. So we're seeing a continual process of transformation and growth in the market. Among the drivers of that growth, but also what have been the obstacles to that growth in the past, are rollout of infrastructure, for example. We haven't had sufficient infrastructure, it hasn't been extensive enough, and the quality hasn't been good enough. Now we're seeing massive investment in infrastructure for 3G, for fiber optic networks, etc., driven by the demand for mobile data. And that rollout is currently about 2 years into a 4 to 5 year process. So it's still underway and it's still going to take some time. But as the rollout increases and the quality of the networks improve, you'll see not just greater take-up, but also greater satisfaction with those networks. Right now and for the next 2 years, we'll probably find people becoming more and more frustrated with the quality of the networks rather than less so. But then once everything is in place, we'll find far more capacity and far better quality.
Let's touch on the competitive environment on the African continent. Of course, we know that MTN has a very strong footing here in South Africa, but mostly on the African continent. We've got Safaricom in East Africa, we've got Bharti Airtel, we've got Zain. Of course, Vodacom is making strides, perhaps dipping its toes in some African countries, but mostly dominant in South Africa. The competitive environment, the pricing structures, can you roll out infrastructure and still see a very profitable telecoms company?
There's no question that the telecoms companies that are well managed can still make massive profits. Nigeria, for example, is still a very attractive market. There's still a lot of growth to be had. And MTN really are printing money in that country. Vodacom in Tanzania are doing exceptionally well, and they've still got great growth prospects in Mozambique as well. So certainly, even where those companies are already well established, there's still a lot of good growth to be had out of those markets. And then in markets like Kenya, for example, which are highly competitive, you're still finding that the networks are very happy to be operating there. No one is saying they're going to move out of a market because there's too much competition. They know that in the future there is still a lot of profit to be had out of even the most competitive markets.
Well, I mean, we know that average revenue per user here in South Africa, in a sense, is also dropping, especially on the voice front, because we know of interconnect fees and changes occurring there. Of course, everyone says the next big growth area is the data area. After that, and when we start seeing more competition within data, then where is the big piece of profit going to come from, and how are margins going to be sustained at these levels?
Margins are probably too high. It's not a popular thing for the networks to hear. But networks have to accept, and investors have to accept, that those margins have to come down ultimately, because those high margins are based on the massive profits that networks are making from their customers. And when customers are crying out for lower costs, then the networks and investors have to accept lower margins as well.
With regards to Vodacom's results, of course, released today, we're seeing quite a big chunk now coming through and profits coming through from the data front. We're seeing a fair performance as well. We know we've got above 100% penetration in South Africa. Give us a sense in terms of what your prospects are for the likes of Vodacom, and is the next big growth area on the African continent?
Data continues to be the big growth area. If you consider that right now data makes up 14% of Vodacom's overall revenue, and that they've seen 38% growth in the past 6 months over the same period last year, then that tells you that as data continues growing, it will also continue to be contributing to profit and to revenue. So efficient management of data and providing a quality service to customers is going to be the magic combination, so that you can still achieve operating profits from lower cost data services.
With regards to having MTN versus Vodacom in one's portfolio, would you suggest that an investor should hold both in South Africa, or would you say that you'd prefer one to the other?
For the long term, they're probably both very good investments, because the prospects for both companies across Africa remain very positive in the long term. But in the short term, one obviously has to look at what strategic decisions are made, what acquisitions are made, and who may possibly be acquired. In other words, MTN is always going to be a potential acquisition target for a big global player. Vodacom isn't going to be that kind of target. The question for Vodacom then has to be, what can they acquire? Because they're having quite a bit of difficulty with organic growth and the kind of acquisitions they have made across Africa.
So you think MTN is still up for sale, essentially?
I wouldn't say MTN is up for sale, but the fact that they have been for sale in the past suggests that it can always happen again in the future, unless they themselves grow to the extent that they become too big to swallow, and they're going to have to swallow the next biggest guy in